So today's stock we're going to be doing is Oracle, ORCL, ticker symbol. We're going to do a SmartScore business quality out of 10. And then we're going to look at our usually dashboard, red, green flags, blue flag, red flag, green flag. Let's see what's going on. What's the issues with it? Should you buy it? Is it overvalued? Is it undervalued? We're going to look at should I buy it? And we're going to compare it to other stocks. Then we're going to use the technicals. Okay, so let's start. Because this is a long video, let's do a deep dive analysis. Let's start with SmartScore. So far, 6 out of 10. I like it to be 7 for me to buy. So let's move on. It's a large cap stock. It's more of a mega cap stock. 400 billion. As you see, we'll go education tab. Anything above 200 billion is a mega cap. We're going to use these numbers. Again, SmartScore. Financial high leverage because of debt equity. Current ratio is good. They will be able to solve this problem in the future, I see, because the current ratio is above, as you can see here, above 1. So for every, they have $1 to pay for all, they can pay their bills 100% and still be left with 0.12, as you can see. Profitability, high net margin, strong ROI, as you can see, above 20% strong. 10% is good, almost 10%, so it's good. That's why I got 9.5. CapEx is 0. We need to still investigate what's going on. Profitability, we already discussed this. Growth above 20% is super strong, so that's good. That's why 9 out of 10. Valuation below, amazing. Below 1.5 is good. Below 1 is even better, stronger. Valuation, you want to see at 22 for the low. 24 is good, fair number. That's the middle number of the med cap, so it's fair. And then we have forward PE is really good. Buffett style below 20, which is good. He's probably looking at this right now. Hello, LOL. And then sustainable dividends, almost 10% good. Dividends good. Payout ratio is good. Okay, so that's good. 7 out of 10. Premium gross margin consistently growth. Yeah, as you can see, yeah, amazing. You got 1 to 2, so it's between strong buy and a buy, as you can see. Technical. You can pause the video and look what's going on. Track record, good track record, as you can see. Not that good. I mean, sorry. It's not above 20%, not even 10%. So it's okay. 5% is good. It should be 10% will be good. Momentum, technicals, we're gonna look at that later. Let's move on. So overall here, 6.5 out of 10, 6 out of 10, almost 7 out of 10. CapEx on our dashboard, red flag, but it did beat May 26. It did beat it, as you can see here. It's better. Cash flow, it should be green. This is a Google issue, like you have free cash flow. They're spending way too much. Google had the same problem. Microsoft is spending a lot, but their cash flow is still good. That's why the stock kept going up. EPS growing, that's what you want to see. Check mark. More finances details. As like I said, 24 is good. 24 good. The average should not. It's average compared to historical average, as you can see here. PE ratio average, see 1953. It goes up and down, as you can see here. So it's average, it's 30. Like I said, it should be below 26 for sure. Below 26 for sure. So 24 is good. 24, you want to see at 22. That's when it's in buying zone. Let's move on. EPS missed. Hit. So quarter 1 is going to start again. We're going to see if it's going to miss or hit. I think it's going to miss because compared to last year, that's what I compare always to. So we're going to move on. Revenue going up, strong, very good. That's why it has good strong. That's why it has strong growth opportunity. Free cash flow down just because of capex. Big issue with capex. Terrible. It's too high. There should be a limit. 30% amazing, good. 10% strong, very strong. I mean, not strong, it's okay, it's good. It's not strong. Shares outstanding, it's good, it's not strong. 2.88. Now let's go to should I buy checklist. And then should I buy Oracle? Should I buy checklist? 24 is good, it's fair, give it check mark. Should be below 26, so good. Fair value, according to this, 114 plus 345 divided by 2, you get 230. It's below that price, good. Peg is a green actually because it's below 1, so it's good. This is not right. Analysts expect, I believe, 175. This is not correct, so the upside, but it is going up. So earning 162. Some people expecting 175. Company's growing, definitely. It's a growth company. Fair value meter, as you can see here. This is what they're. You can just pause and look at this if you want. The stock can go from 240 all the way up to $149 according to this, but most likely 230 the high side, the end of this year 141. So the fair value says 158 to 173. That's between that range. Now let's go to our earning valuation calculation method. We're going to look at the estimates and then we're going to use these numbers. So they're expecting about 30% growth from this price to here, so the EPS should be growing at 30%. Should I buy? Okay, earning valuation method. Let's start. We're gonna do 24. Apply. So first, we're gonna start with this. Let's open up the calculator just to show the entry price. 5.83 times 24. That's a low mega cap stock. 139. If you're gonna buy it, you should be buying it. This is in the buying zone below. I honestly would use the number 22. So let's just try. It's almost that price. I would use the number 22. I wouldn't use this if I would buy it. So let's just move on. So if you buy it today using 24 PE ratio year over year and going at 10%, they're saying it's 30%. Like I said, they're expecting 17 EPS by 2030. $204, you get 42% back if you buy it at this price. Now let's see. As you can see, we're gonna use here middle, which is 30 and 38. Here we're gonna use these numbers. Let's just say they invest or something happens to get a crazy contract from the government or something like this. Stock will be at 30 PE ratio. You're looking at 43% back of your money. Let's just time it. 5 point. No. 5.30 30 $175, and then that's what it's worth today if it's that P ratio level. Let's do 5.83 times 38. That's the high mega cap stocks. 221. This is selling zone. Even above 175, it's a selling zone. It's not that high of a mega cap stock. So there you have it. Now let's do 38. If you buy it today and you believe the PE ratio will be a high mega cap stock, if you believe that, honestly, I think you're going to be cooked. But okay, as of now, this is what it's going to look like in 2030. Above 126 back of your money, you're going to get back 300. Now let's look at what else should we. We said we're going to look at, after the analyzer tool, technicals. Bullish, bearish, overbought, almost overbought. I would not consider buying it just because weak performance, 21% if you buy it on the dip. Let's investigate this. Our trade view. ORCL, as you can see, if you were gonna buy it, should have bought it. I made this 128 price. Support level, resistance level 168. So if you enter, you should have been entering under this price. So you could have bought it, I guess, here. No, false signal. This is a good signal. You could have bought it here. You could have bought it here, and you could have bought it here. And then you hold, obviously, till it hits the above resistance. That's when it's selling. So as of right now, if you're holding it, just wait. Don't do anything. Do not sell it. Just wait. Unless it goes way below 120, not even 125. I'll say below 120. Then you can just sell. You can do a stop loss. Again, I'm not a financial advisor. I'm just giving you a deep dive analysis. What I believe. Thank you for your time. What I would do, I would put on my watch list if it pulls down to below 127, and then you want to see it keep going down. And then when it pulls back up, that's when it's a buying zone. When you see it pulling back up, that's when you enter it. Okay, guys? Thank you for your time. So put on your watch list. If you bought it, and then you put on a sell zone above this price, 164, you can start selling. Thank you for your time.